Good morning. This is Bloomberg Daybreak Europe. Happy Wednesday. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks struggling for traction after Wall Street's tech rally and Nvidia's rebound as Fed officials call for further evidence of cooling inflation before cutting rates. Leaders of France's three biggest political groups clash in a televised debate ahead of the first round of parliamentary elections. We bring you the highlights. And at least 5 people have been killed after anti-government protests in Nairobi turned violent, with anger directed at the president's tax-raising plans. European markets ended the session on Tuesday lower. Today, though, looking a bit more constructive. Yes, there is caution in the Asian markets, but European futures pointed to gains of 0.5%. On the corporate stories, we'll be certainly focusing on VW at the open, 8 a.m. UK time, on the back of that deal, of course, with Rivian. FTSE 100 futures here in the UK looking to add around 16 points, pointing high by 0.2%. S&P futures pointed to gains of 0.1%. Nasdaq futures looking to add 22 points after gaining more than 1% yesterday, lifted by that rebound in Nvidia. Yes, the company is back. Buying the dip seemed to have been a theme yesterday, adding Nvidia more than 7% by the end of the close. Let's flip the board and look cross-asset then. We've been hearing in an exclusive interview with the ECB member, Rehn, about his views, saying that 2 cuts being priced in by the markets, not unreasonable. Euro-dollar at 107. The US 10-year, 426, yields up just 1 basis point so far in the session. Brent, $85 a barrel, up 0.4%. Some reports that maybe the inventory story is starting to edge a little higher in the US. Copper, interestingly, currently down 0.4%. Just marking for you this, copper falling to its lowest level in more than 2 months. So the pricing around copper has come off about 14% since it topped that 11K line back in May. Let's check in on the Asian markets now. Cross over to Avril Hong, who's standing by in Singapore. Avril.
Yeah, Tom, we're seeing those chip stocks rebounding, tracking Nvidia's performance overnight. But in the rest of the sectors, it's pretty much a mixed bag. And this tells you that the focus is really shifting to the PCE numbers out of the US on Friday. And amid all this, we're seeing a bit of a laggard on the mainland. Chinese stocks are not doing so well, but bonds there are continuing their rally. Those expectations of stimulus, the concerns about the economy, that's all helping bonds still. And we saw the 10-year yield actually hit its lowest level in more than 2 decades earlier today. Let's flip the board because, as I say, it's really about the inflation picture. And we're seeing data also coming out from Australia today. The CPI print hotter than expected for a 3rd straight month, raising concerns that rates there are not restrictive enough. Hawkish calls are coming in. The likes of Deutsche Bank, which previously expected a cut in November, now pushing out that forecast to the 2nd quarter of next year. It now sees a hike in August, potentially. Aussie yen hitting the highest level since 2007. And we're also seeing, amid all the buying in the Aussie and the selling in the yen, that's exacerbating the levels on dollar yen, moving ever closer to that 160 level, raising the risk of intervention. Let's flip the board because even as we keep an eye out on Australia inflation data, it's worth highlighting what we're seeing in its largest trading partner, the forecast for the Chinese economy. Bloomberg economists, polled by Bloomberg, I should say, actually expect it to meet its full-year GDP target of 5%. This is a revised outlook, and thanks in large part to what we're seeing in the uptick potentially coming through from exports. This would fit quite well into what Chinese authorities want to see, that exports doing the heavy lifting amid weak domestic demand, but might not sit so well with some of its trading partners, such as the US and the EU. That's something that potentially could exacerbate those trade spats, concerns about overcapacity. Tom.
OK, that 5% GDP target for China back in the cards, it seems, at least according to that survey. Avril Hong with a check on the Asian markets this Wednesday. Thank you. Joining us out of Singapore. Now, we're just days to go, of course, before France votes in the first round of its parliamentary election. Leaders of the 3 biggest political groups have clashed on everything from retirement and taxes to immigration in their first televised debate. Let's bring in then Bloomberg's Caroline Connor, who joins us with the latest, presumably had been watching this debate unfold. Caroline, what were the key takeaways for you?
Three men, half an hour each, and constant clashes about the economy and about immigration in this debate last night between Jordan Bardella from the National Rally, Gabriel Attal, the current Prime Minister of Emmanuel Macron, and of course Manuel Bompard, who was representing the far left. The first topic was of course the cost of living, which is a top priority of the French. Bardella accused Attal of having bankrupted the country, and he accused Bompard of wanting to create a Cuban-style economic model, kind of stealing the punchline here from Emmanuel Macron about this Hollande tax on the rich a few years ago. Then you had Bompard from the left accusing the National Rally of giving up on the cost of living, while they are offering to block prices on essential products and increase the minimum wage to 1,600 euros. That measure for Gabriel Attal would be a machine to destroy jobs. The Prime Minister Attal, of course, tried to defend Macron's legacy, and one of the biggest clashes of the night was about the pension reform. You know, Emmanuel Macron spent months last year facing protests in the streets to raise the retirement age from 62 to 64. Useless and inefficient for Jordan Bardella, who wants to bring back this age to 62 and even 60 for those who started to work before the age of 20, while the far left wants to go back to 60 years old for retirement in France by 2027. So pretty intense debate. We're going to have a second debate on Thursday night before the first round on Sunday.
Caroline, polls as of yesterday showing Macron's party in third place, behind the leftist grouping, behind the National Rally. Is this debate likely to move the dial in any way in terms of the polling for these parties?
You know, I actually wonder if this could potentially boost the far left, because against all expectations, Manuel Bompard did pretty well in this debate. He appeared calm and reasonable, defending his program. Meanwhile, Gabriel Attal, the current Prime Minister of Emmanuel Macron, was kind of giving lessons, occasionally appearing arrogant, which is something that, you know, the French don't really like. And Jordan Bardella from the National Rally appeared very nervous, looking at his notes a lot. So we'll see if this translates into anything in the polls. As you were mentioning, at the moment, the National Rally still has a clear lead with 35.4% in our latest Bloomberg poll of polls. In fact, we had one poll from Odoxa showing that they could potentially get an absolute majority.
OK, Caroline Cornin, thank you very much indeed with the analysis on the back of that debate in France. We appreciate it. Now, to the markets, and Wall Street climbing for the first time in 4 days following a rebound in Nvidia, with traders searching for signals as to where the bottom may be after the stock's $430 billion sell-off. Let's bring in our M-Life strategist, Mary Nicola, for the take on this. Mary, what do we read into the sustainability then of the AI theme that is feeding through these markets, given the rebound that we've seen for Nvidia on the back of that pretty significant drop over 3 days?
Yeah, I think one of the things that we've noticed from the Nvidia drop is that a lot of it was not fueled by fundamentals, and a lot of it was fueled by some of the technical aspects. So even if you look at, you know, one of the things that we've been flagging as a team is the fact that as we're approaching quarter end, month end, we could see a lot of rebalancing. And remember, Nvidia had a really strong run over the last quarter, so people could be looking to lock in their profits at this point. So yes, you could see a few more wobbles for Nvidia as we head into the end of the quarter, but at the same time we have to also keep in mind that this wasn't a fundamentally driven sell-off, because the AI theme still remains very well intact. And of course, if rates remain well behaved, then obviously a lot of these growth stocks will remain well supported as well.
On the Fed speak question, there's a debate as to whether AI, Nvidia is more important than the Fed right now. But we listen in, of course, to the Fed speak that's come through this week. We've been hearing from Michelle Bowman. We also heard from Lisa Cook as well. We'll take a listen to what she had to say. She said it is appropriate to reduce rates at some point. Let's take a listen.
With significant progress on inflation and the labor market cooling gradually, at some point it will be appropriate to reduce the level of policy restriction to maintain a healthy balance in the economy. The timing of any such adjustment will depend on how economic data evolve and what they imply for the economic outlook and balance of risks.
Mary, then tying together what we've been hearing from these Federal Reserve officials this week, do we have more clarity on how the FOMC thinking it is adjusting?
No, it looks like whether you're a hawk or you're a dove within the FOMC, it's still all about data dependency. So even Lisa Cook, who is on the dovish side among members of the FOMC, she's still pointing to the fact that the data has to point them and to give them the confidence to actually start easing rates and start commencing the easing cycle. And even Michelle Bowman has also said that, obviously she is looking at some of the upside risks to inflation that may come through. What it comes down to and what it boils down to is just that data dependency. And of course, what we saw today from Australia, if it's any indication of the bumpy road that we're seeing in inflation, this looks to extend for some time. So if they're looking at one rate cut this year, and if inflation continues to prove that it is volatile, then we are likely to move more in the direction of one cut than to two cuts.
Really interesting in terms of Australia, potentially as a warning on the disinflation theme. Bloomberg M-Live strategist Mary Nicola, thank you for the analysis. Currently, markets pricing in 46 basis points of cuts by the end of the year for the Fed. We look ahead, of course, to inflation data out on Friday as well for further clarity. Meanwhile, today, here's what else to be thinking about. 11:40 a.m. UK time, we're going to be hearing from the ECB's Ollie Lane speaking, of course, on the back and following what we've been hearing from Ollie Rehn, who said it's reasonable to think that two cuts could come through, a further two cuts from the ECB. We'll see if Mr. Rehn builds on that theme. 8:15 p.m. UK time, we're going to have the next debate between the Prime Minister of the UK, Rishi Sunak, and, of course, his counterpart, the Labour Party, Keir Starmer. The BBC debate then later this evening. We'll see if it does anything to adjust the poll gap that remains between Labour and the Conservatives. And at 9:30 p.m. UK time, the Fed's bank stress test results will be coming through. So implications for lenders and what they can do in terms of returning capital to investors. Coming up, violent protests in Kenya over controversial tax proposals, leaving at least 5 people dead. We bring you the context on that story next. Plus, Nigeria's central bank governor tells us the worst of the country's currency volatility is over. More from that exclusive interview coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, at least 5 people have been killed after anti-government protests in Nairobi turned violent. The crowd was protesting against controversial new tax measures being pushed by President William Ruto. For more on this story, let's bring in Bloomberg's Ondiro Oganga joining us from Kigali. Ondiro, walk us through the events then that led to this moment.
Tom, this is one of the biggest protests in the history of Kenya. These protesters are young, they're educated, they mobilize themselves online to protest against the finance bill that is aimed at increasing taxes and unlocking revenue for the government from the IMF. But they feel that it's going to mop up whatever little liquidity they had left. And so it was well organized, synchronized nationwide. While these people were out in the streets, Parliament was taking a vote, and this bill breezed through Parliament and is waiting to be assented into law by the president. While Parliament was taking a vote, some of the protesters in Nairobi, Kenya, were actually approaching Parliament buildings, and they were able to breach the gate, access the ground. What happened next was the most tragic thing in the history of Kenya. Police opened fire using live rounds. International media was showing at least 2 lifeless bodies lying outside of Parliament. And analysts say that the breach of Parliament just goes to show the magnitude of anger in Kenyans, because even at the peak of tension in 2007 and 2008, national buildings were not targeted.
So what happens now then? And given this context around what we've been seeing and the tragedy in the last 24 hours in Nairobi, what happens now? What are the implications with or without this bill?
President William Ruto is caught between a rock and a hard place because he needs to assent this bill into law by the 1st of July, because that's when the new financial year comes in. He'll unlock revenue from the IMF, but he risks more socio-political tension in the country. Yesterday, while he was addressing the country, very bullish in his tone, used words like treason and dangerous criminals, saying all security agencies are now disposed to ensure that something of this magnitude never happens again. Former President Uhuru Kenyatta, on the other hand, reminding him that power was bestowed to him by the people and he needs to listen to them. The protesters are resolute in their determination to continue hitting the streets until their grievances are addressed. And an analyst at risk intelligence company Verisk, Maplecroft, says that President William Ruto has underestimated the anger and the disappointment that Kenyans feel towards him and in his administration.
Okay, Bloomberg's Ondiro Ogunga, thank you very much indeed with the latest in terms of the political tensions and the violence on the ground, of course, in Kenya. Now to Nigeria, where the central bank governor there says the worst is over for excessive volatility in the country's currency. In an exclusive interview, he told us why stabilising the Naira is crucial to lure investors.
We're relatively pleased with how far we've gotten up till now. In the past 2-3 weeks, after a period of volatility, we've seen a lot of stability within the market. There's hardly been any movement in the currency.
Right.
The rates have been merged. In the past, you had 2 different rates. Right now, more or less have 1 rate. Okay. And we believe that this is good. It allows companies to plan. And again, it gives an idea of where the potential road of travel is for people who are investing in our economy. So I'm relatively pleased with where we are. We don't believe that we've got into the position we want to stay at. It's continuous work in progress. And we will do everything possible to ensure that we continue to manage the macroeconomic fundamentals that affect that market in such a way that it will continue to improve.
Do you anticipate more strength then for the Naira by the end of the year?
Well,
or are we stable where it's at right now?
Well, that is a question which I would say would depend on a whole host of different issues. I do believe that we have more or less seen the worst in terms of volatility. I believe we've seen the worst in volatility. We are happy that the market is now such that willing buyer and willing seller operate within the market. We are also very alive to observing the way and manner in which that market operates and ensuring that it gives the best value that can be accomplished using certain tools. It's also important to mention, though, that the monetary and fiscal work closely together.
Right.
So I would only be giving you one picture if I said, the monetary does that, or the monetary does something else. But they work very closely together. And I believe that that complementarity is what will give us the optimum rate for the Naira.
Nigeria's central bank governor speaking to us exclusively there. Don't miss Bloomberg's monthly Africa Amplified programme for a deep dive into some of the top stories impacting markets on the continent. The next programme on Thursday, July the 4th, will bring you top voices from the travel sector. There's plenty more coming up. We will keep across and bring you more details in terms of Volkswagen's investment in the EV business that is Rivian in the US, what that means for VW's prospects, the tie-up and the details coming up. And of course, we also break down the Nvidia story for you and give you a bit of analysis in terms of the Fed's bank stress tests. Stay with us. This is Bloomberg.
We are very much moving from away from coal to oil, oil to gas, gas to clean energy.
Okay.
And the reality is that for quite some time, fossil fuels will be with us, right? Especially natural gas. So that glide path is long. And the world economy cannot go cold turkey on this tomorrow. That was the commitment we made. And we made a statement of how aggressively we were going to do it. And we've laid out these targets, we've laid out our measures, people can judge us by it, and we will report.
Okay, and then what's been the response then? Because you mentioned you're subject to the push and pull, and I imagine that's the case. So some of your critics will want you to go cold turkey on all of these parts of the energy mix, and others will say, no, you're leaving money on the table. So what's the response?
So I'll tell you the push and pull first. So in roughly the same 2 to 3 week period, in January, February, the state of Texas banned us from doing municipal bond business because we were too green. State of Oklahoma followed. I'm watching what Mike said about Florida and their fair access laws fairly closely. We have a retail business in the United States as well, credit card business, in addition to our investment banking and trading business. So it affects us. So in January, we get that. And then in February, about 2 or 3 weeks later, we get a consortium of UK universities, 1 or 2 of whom have been clients of ours for 250 years, saying that they didn't want to do business with us because we were not green enough. Okay? So you have that push and the pull across the Atlantic. More interestingly, a major financial newspaper based in New York, which is global, covers Texas, but not what happens to us here. And a major financial newspaper based not that far from here covers what happens to us in the UK, but not in Texas. Right? So not only are there multiple actions, different actions in different jurisdictions, but also it feels like we are playing to audiences and a world community which does not compare and contrast.
Barclays CEO C.S. Venkatakrishnan speaking to Bloomberg's Anna Edwards. Now to some other stories making news this Wednesday. The US Defense Secretary has warned that a war between Israel and the Lebanese militant group Hezbollah could trigger a new conflict in the Middle East. Lloyd Austin made the remarks as Israel's defense minister visited Washington. Israel has threatened to open a new offensive after Hezbollah fired rockets into northern Israel. WikiLeaks founder Julian Assange has walked free from a US court in Saipan after pleading guilty to leaking national security secrets. The plea was part of a deal to end a 14-year legal battle to prosecute him for releasing sensitive US military documents and cables. Assange is due to return to his native Australia later today. Coming up, as the leaders of France's main political groups clash in a heated television debate, we take a look at markets ahead of Sunday's first round of voting. European markets today pointing to gains of 0.5% after dropping 0.2 yesterday. US E-minis, by the way, S&P E-minis pointed to gains of about 0.1%, looking to build on the upside that came through yesterday, lifted by the gains for the likes of FedEx, but also, of course, Nvidia, up more than 7% by the end of the close. We're back to French politics, though, and how to position after the break. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. It is June the 26th. Happy Wednesday. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks struggling for traction after Wall Street's tech rally and Nvidia's rebound as Fed officials call for further evidence of cooling inflation before cutting rates. ECB Governing Council member Olli Rehn tells us investor expectations for 2 more rate cuts this year are reasonable as he remains optimistic about the economy.
The big picture is that, and our projection is that the European economy is heading for a gradual recovery this year.
Plus, Rivian's shares soar in after-hours trade as Volkswagen says it will invest $5 billion in a joint venture with the EV maker. European markets looking to turn around from the modest losses that we saw yesterday. European stocks closed lower by 0.2% on Tuesday. Today, though, pointing higher by 0.6. We await, of course, the inflation data out of some of the major European economies later this week, and, of course, the inflation data out of the US as well. FTSE 100 futures pointing to gains of 18 points. S&P E-minis looking to add about 0.1% after the gains of yesterday. Nasdaq futures above 20,000 looking to add about 0.2% after the upside of more than 1% yesterday, with the boost coming from Nvidia. Let's flip the board. Cross-asset euro-dollar in focus on the back of the comments from the ECB's Rehn, currently at 107, a little softer by 0.1%. The US 10-year at 4.26. Brent's higher by 0.5%, $85 a barrel. And copper under pressure, down 0.4%. Now, leaders of France's three main political groups have clashed in the first television debate ahead of the first round of France's legislative elections on Sunday. Macron's decision to call a snap election has markets on edge, of course, after a $200 billion stock market rout. Let's get the view now of Claudia Panseri, CIO for France at UBS Wealth Management. Claudia, thanks for joining us this morning. The CAC 40 is down about 7% then since Macron's surprise announcement. It's up less than 2% year to date, so it's wiped out many or much of the year-to-date gains. Do you look for opportunities ahead of the first round vote in France in terms of potential cheap stocks, undervalued stocks in the French market that you look and could be adding at this point? Or do you sit on the sidelines for more clarity?
Hi, Tom. Good morning, everyone. So we are still waiting and be on the side. We are being positive a lot on consumer stocks for a while. But I think there is some uncertainty around the outcome of this election. So we are waiting for a better opportunity after the second round. We still see some spread widening of OAT versus bond, though that may have an impact on some banks and some other stocks within the French market.
Which parts of the French market look most vulnerable to any potential policy changes from a new government, Claudia?
Listen, I think we don't expect many policy change, to be honest. I think the capacity of every government we will be in 2 weeks will be very limited by the fact that France is an excessive deficit procedure. But probably bank, if we have widening spread, will be still under pressure. We will have some building material stocks, infrastructure stocks, utility stocks. I see less pressure on consumer discretionary name, luxury name, probably that because they are not exposed to internal consumption. Small cap may also be under pressure depending on which reform will be put in place. But clearly, I think it's still too early to take any decision on investment on the French portfolio for now.
What about relative value in debt then, sovereign debt, the sovereign debt of France, or indeed Italy? Do you look to Italy potentially as one way to play France?
Not yet. I think for the time being, what we have seen is a sort of beta move. The Spanish bonds have been widening, Italian bonds has been widening as well, French bonds have been widening. So there is a concern about the level of debt in Europe. But clearly, we will see more volatility to come. We will have a better opportunity after the 7th of July. And I think then we will probably go for this country with a high capacity to reform, stability, but also on countries which have low level of debt and have been some widening in a spread. But for the time being, whatever is Italy, Spain, or France is still too early.
And I know, Claudia, you've been thinking and doing some deep dive into the deficit and debt challenges of any new French government. The French deficit at around 5.5% last year, debt at about 110% of GDP. To what extent do the financial markets, does that fiscal reality constrain any radical policy change from any new government in France?
Is sure. So this was my point at the beginning. I think there is too much constraint in order to be able to push extra financing. Let's think about it. If we have a spread widening and you have any government announcing spending and higher spending, there will be a constraint from the ECB to buy some French bonds. So I think the reality is that debt sustainability is a critical point for everyone, which will be named PM in 2 weeks. And so the capacity to keep reducing the debt is the most important thing. You have probably seen in the different debate, some party, and particularly on the right side, are reducing the level of spending they announced a few weeks ago. Clearly, this is an important point for investors to watch. There are still a lot of spending on the left side, which has been announced, but then there is a lack of visibility about what they can really do when will be the government. For the time being, the volatility will remain high, but there is the capacity of re-enter the French market once that visibility will be higher. And I think the visibility will be higher in 2 weeks' time.
Claudia, we're going to be hearing from the ECB governor, one of the members, of course, of the ECB board, Olli Rehn, in the next couple of minutes. He's been talking to us. He's been saying that two rate cuts. Interestingly, on France, by the way, he says he doesn't see a debt crisis. He sees a risk premium being priced in, but no risk of debt crisis at this point. But on the ECB's next steps, he says two more cuts this year seems reasonable. Does that align with your thinking on the ECB?
Fully aligned. So we are expecting 25 basis points for September, another 25 basis points for December. Funny enough, many people have been rising the cut in interest rate in September. We still have it on our scenario. I think the ECB will be watching CPI more than political issue. And I think the ECB has also different monetary policy from the Fed. The Fed has reduced the quantitative tightening. The ECB is still ongoing. Clearly, the ECB need to cut rate. There is some recovery on the economy, but we still see that this recovery is pretty shy. So less the level of interest rate, and particularly real interest rate, is important.
OK, Claudia Panseri, CIO for France at UBS Wealth Management, on it being reasonable for two cuts to come through, additional cuts from the ECB, and how to position and the expectation around additional volatility in France as we lead up, of course, to that first vote on Sunday. Claudia, thank you very much indeed. So the governor of the Bank of England has said it is quite reasonable, as we mentioned, to expect those two additional rate cuts in the euro area this year. Olli Rehn, who is a member, of course, of the ECB's Governing Council, says he remains optimistic about the bloc's economic outlook. He spoke exclusively with Bloomberg's Mark Schroers.
I don't usually comment market views, but of course we are aware of market data, and they are within the frame of reasonable development. The essential thing for the decision making in the ECB Governing Council, and for me personally, is that we look at three factors in particular in every monetary policy meeting. We look at the inflation outlook, we look at underlying inflation neutralized from the volatile energy and food prices, and third, we look at the strength of monetary policy transmission. In light of these three factors and their developments, we take our decisions and set rates in every monetary policy meeting of the ECB Governing Council.
Yeah, but if the data develop as predicted in the projections, then it would be fair to assume further interest rate cut this year and next year?
In case we see the disinflationary process continuing and moving towards our symmetric 2% target over the medium term, then it is reasonable to assume that we stay with this direction and continue rate cuts. Having said that, I don't take any stand on when and how much. We are not pre-committing ourselves to any particular rate path.
Mm-hmm. And if you stress the data dependency of the ECB, does that also mean that you would be in favor in deciding on interest rate cuts at meetings with new ECB projections, or would you say that also in between forecast meetings there is a possibility of an interest rate cut, that each meeting is live?
I don't think we should constrain ourselves, limit ourselves in monetary policy making only to the quarterly projection meetings. We have monetary policy meetings every 6 weeks. We have new data on growth, inflation, employment, other aspects that are important for monetary policy decision making, and we can on that basis take decisions, and we must take decisions to set the rates in every monetary policy meeting, whether we leave the rates unchanged or we change the rates. If we were to resort only to quarterly meetings and take decisions in them, we might as well cancel the so-called interim meetings and save some fuel and save the planet. However, I would not go for that.
Bank of Finland Governor Olli Rehn speaking to us exclusively. Now to a major corporate story, and Rivian's shares have surged after hours after Volkswagen announced plans to invest $5 billion in a joint venture with the EV maker. Let's get the details then and bring in Bloomberg's car czar, Craig Trudell, with what has been unfolding between these two. Craig, what do you make of this deal? What are Rivian and Volkswagen planning to work together on? How significant is this?
Yeah, this deal is going to be about software and electronic architecture, the latter being a bit of a wonky term, but when you think about just all of the parts of a vehicle now that are controlled electronically, and all of the wiring and sort of network systems that you need to get all those systems to speak to one another and work smoothly, that's what Volkswagen is tapping Rivian for. An initial $1 billion investment and plans to top that up to $5 billion over a longer period. It's really a significant move on Volkswagen's part to shore up the finances of a company that, really when it was going public a few years ago, was, sort of the talk of the auto industry, a lot of optimism about, just how good looking Rivian's vehicles were and how promising a product pipeline it had. But, its ability to sort of translate that into financial results has really been challenged. So for Volkswagen to come in and really sort of backstop Rivian after all of the challenges that it's had the last few years, it helps kind of explain why we've seen the stock jump more than 50% after hours last night in the U.S.
Craig, look, you've followed the sector in detail for years. Does this deal, to you, sitting where you are, with everything that you know about this sector and how things are evolving, does this deal, do you think, make sense for both parties?
I mean, I think it's an obvious deal you take if you're Rivian. For Volkswagen, I think it speaks to the challenges that they're having standing up their own software business. They have a business called Cariad that's had real issues with cost overruns and the software system that underpins its electric vehicles has really, it's held up product launches. It's held back models like the Volkswagen ID3 that was supposed to be the sort of VW Golf of the electric age. It hasn't at all lived up to those sort of hopes or expectations. And the other thing that I think is really puzzling about this deal for Volkswagen is they're standing up a brand, a new brand called Scout that, to me has really kind of looked like a Rivian ripoff, sort of outdoorsy SUV and pickup brand. So for them to, put $5 billion into a company that they're also on the other, side of the house trying to compete with and in some ways replicate, really just speaks to, their software issues really must be thorny and continue to plague them.
That's a really interesting context. Craig Trudell on this deal between Volkswagen and Rivian. Thank you very much indeed. Coming up, Nvidia rebounds after an historic rout. We will talk markets next. Does the AI theme still have legs? This is Bloomberg. Welcome back. So, Nvidia bouncing back, dip buying after a rout that saw the biggest market cap loss over 3 days ever for a publicly listed company. But the rally yesterday up more than 7% as investors got back onto the Nvidia train. Of course, year to date, you're still seeing gains of 160% for Nvidia. The market cap back above 3 trillion, 3.1 trillion, still below Apple and Microsoft, but it's firmly back above the 3 trillion mark. And again, expectations that maybe there's further to run for this AI theme, on which let's bring in Aneeka Gupta, Director of Macroeconomic Research at WisdomTree. Aneeka, what do you make of what's been going on with Nvidia this week? Does the rebound that we saw yesterday stateside, does it suggest that there is a sustainable nature to this AI theme, or does what we've seen over this last week give you cause for concern?
Well, very good morning, Tom. We have seen some extraordinary leadership from U.S. equity markets take place, and that has really been led by the AI theme. Nvidia, in particular, has been the dominant name within this AI theme, and we do believe there's further to run, given the fact that it has had exceptional earnings results in Q1, has also put forward a very ambitious target for the rest of the year. That being said, we are seeing signs of a bit of caution, from investors. The opportunity cost to actually sell remains extremely high. Yet investors remain very hesitant to put on new positions, given the fact that we do have, the U.S. elections coming up, and that remains a very important risk for markets as we move ahead.
I think it's really interesting that you zero in on the politics of the US, because we'll focus, of course, on what happens here in the UK, arguably more importantly in terms of political risk, France. But you're already pushing ahead to November and suggesting that is a bit of a cap on this market rally. Just to kind of explain the thinking on that, and post-November, how you see things unfolding.
So what we've been seeing, Tom, is there's been a flock of investors into quality. Names where you have strong balance sheets versus the weak ones, a dominance of large cap over small cap. Just basically seeing a flock towards higher growth oriented names, and that's just led to a much higher weight within the mega cap, large cap tech stocks. So we are seeing, from an equity standpoint, concentration risk from a geographic perspective, concentration risk from a sector perspective, as well as a stock perspective. So that does, cause a bit of alarm, given the fact that we have seen markets reach all-time highs, but they're doing that on the back of very, very narrow breadth. So the important factor for us is looking ahead. If we do get those interest rate cuts by the Fed and we see a broadening out of this rally, that would provide further legs for this rally to run. If we don't see that coming, I think that would be a sign of caution, heading into the US elections.
Okay, so we think about and focus in on when that rate cutting cycle starts and whether it leads to a broadening of the rally, the importance, of course, and the concerns around the concentration risks. What is your take right now, Aneeka, in terms of the health of the US economy? Are we going back to trend, or is this start of a more significant slowdown in that economy?
So we are seeing some signs of fatigue from the US consumer. That was quite evident from the retail sales that we received. They are beginning to weaken, and I think that's a sign of the pressure that we're seeing from interest rates remaining longer. Credit card costs are just rising with a higher interest rate environment. That being said, we're still seeing a lot of strength on the industrial side. So manufacturing data came in a lot stronger. The S&P industrial numbers were also up at a 2-year high. So that just tells us that there are signs of weakness from the consumer side, and the consumer has been the strength of the U.S. economy, given that 70% is derived from the U.S. services sector. So that gives us some sign of caution. However, if we do get those rate cuts in time, that would alleviate some of those pressures and help the U.S. economy move ahead on a stronger path.
Aneeka, just very briefly, what gets us from 5.25% by the Bank of England to 3.5% next year?
Well, we've already seen inflation coming down to the BOE's rate of 2%. I think the important factor now that we're really waiting for is those sticky services inflation. We are likely to see a bit of alleviation in that inflation pressure, and that should allow the BOE to go ahead with those rate cuts and bring us down to that target level.
Aneeka Gupta, fantastic, Director of Macroeconomic Research at WisdomTree. Thank you very much indeed. There's plenty more coming up. Stay with us. This is Bloomberg.
I mean, if you look at the chart on Nvidia, you can barely see the correction. So, I mean, you know, on a percentage basis, it's down something like 10%, but you have to like peer really, really carefully at the chart to see that move. So, I don't think it means anything. The people who own that stock know it's expensive, but they're buying into a story. And as long as the story is intact, like Nvidia is obviously intact, the story is going to continue.
Steve Eisman of Neuberger Berman there on Nvidia. Well, let's peer into that chart then and see if he's right when he talks about the drop that we've seen, of course, over the last 3 days, although that, of course, rebounded yesterday. And that was significant gains of a little over 7% for Nvidia. And there's the move you can see over a longer-term basis. Of course, you did have that historic drop over 3 days, about 430 billion. But there was this rebound yesterday. It seems investors are looking for the next level of sustainability. The stock is priced at 127 right now. 115 is seen as a key support level. $100 per share seen as another potentially significant support level. So to what extent does this point to a further uptick in terms of Nvidia, or was this wobbler this week a concern? That's the story in terms of the market rebound. Back above 3.3 trillion, by the way, 3.1 trillion, still below Apple and Microsoft, but back above that 3 trillion level in terms of the total market cap, up year to date by 160%. Let's have a look at valuations, though, because this for some is the concern. And again, Steve Eisman saying this is about a story, don't worry about the price. But Nvidia, price to sales, 3 times industry average, as you can see. On a forward 12-month price to earnings basis is at 44.6 versus about 40 for AMD, its key rival, of course, or at least one of its key rivals. So not hugely and markedly above AMD, but versus Apple, Apple's 12-month PE, forward PE at 30. So there's that gap there versus Apple. For many, the price and the valuation will remain a challenge for Nvidia. Markets today is coming up next. More analysis, of course, on another big day for these markets. This is Bloomberg.